So, Giovanni, January 15th, 2015, uh, Swiss franc blew the financial markets of the world. Now, precisely 10 days later, we are talking about it again. What is the situation now? Do we see any stabilization? Do we see any move upwards, downwards, or any growing trend?
Is a very good question, because when the Swiss National Bank set the floor, some in 2011, they from the very beginning stated that they didn't want to fix the exchange rate, but was a temporary measure to avoid excessive appreciation, because there was a lot of concern globally and they wanted to stop it. Now, the plan was to let the Swiss franc depreciate around 130 level against the euro and then let it go, and it didn't work. It didn't work because the concern on a global basis increased rather than decreases. Now with the European Central Bank putting the quantitative easing, because they still have a lot of problem in Europe, the Swiss National Bank was, so to say, forced to abandon it to avoid a huge balance sheet on their side. And now it is, from the different parts, it's very difficult. What is the right exchange rate, Swiss franc versus euro? That the euro area is the main commercial counterparty, and also Swiss franc versus the US dollar or the other currencies. Now it is around the one. It went through the one, now a little bit higher compared to the parity against the euro, and is close to a level where nobody knows exactly what it is going to be. The Swiss National Bank says that a fair value is around 130, but nobody really believes it's going to back to these levels.
So it will take a lot of time for it to go back, if at all.
Probably it's not going to go back to these levels, because the quantitative easing, the depreciation is going to continue, but the Swiss franc is a currency long term that tend to appreciate against all others. The inflation in Switzerland is lower compared to the other countries. The productivity is higher compared to the other country, which means that Switzerland has a natural tendency to appreciate.
So do you see any investors leaving Switzerland already, or they're in the waiting positions?
No, in Switzerland, most of the investors are not Swiss franc based. Only the Swiss people, like myself, think in Swiss franc and they are used to the Swiss franc. Most of the investors that are in Switzerland, they have a reference currency US dollar, euro, or pound, or other currencies. So the impact for investors of the Swiss franc appreciation against the other is mainly for Swiss people with global investment. For the others, if they had some Swiss franc in their account, they are happy. For the Swiss investor, it strongly depends how the risk of the exchange rate has been managed by their managers.
So Swiss investors, how do they have to protect themselves in situations like this? If not the Swiss investors in other countries, how do they protect themselves?
In this case, not only the Swiss franc appreciated by 20% or all other currencies depreciated by 20%, but also the stock market fell by 15%, because Switzerland is a country where there is a lot of exporters. So exporters mean that with a 20% appreciated currency, they're going to have difficulties in exporting, and the foreign company are going to be happy because they can import easily to Switzerland. So also for the Swiss real economy is going to be difficult. For the investors, given the Swiss market is small compared to the rest, they tend to have global investments. Part invest in Swiss currency, in Swiss stocks, in Swiss real estate, in bonds and so on, but a big part of their wealth is invested globally. And the most natural way how people protect themselves is to invest globally and have some currency hedging or currency risk exposure reduced through derivatives.
So how about at this moment is the damage to Swiss economy?
Now, there has been some new research from the big banks that they predicted continued GDP growth close to over the last year, so around 1.5% to 2% level. And the first initial re-evaluation is now that Switzerland probably is going to have a negative GDP this year. Flat zero. Some commentators are going to say to negative GDP, but it's very early to determine, because at the current level, 1-to-1 against the euro is going to be very difficult. It depends what's going to happen over the next month, whether there is some reaction, some comeback to the something like 105 or even higher.
So how Swiss neighbors are taking advantage of the situation or not taking advantage of the situation?
The clear advantage is that you can go on holiday much cheaper. You can buy foreign goods much cheaper, either going outside the country or even importers are going to lower their prices because they can source their goods and services globally, and so a 20% appreciation of Swiss franc is a very good deal for good importers, and the Swiss people are going to profit with lower prices. Unfortunately, one of the consequences, lower prices of goods, could also mean lower wages.
Yes.
Because sooner or later you're going to have an impact also on the labor market.
That's true. So we've already viewed a lot of news about watch companies commenting on the situation. And what about other industries? What about fashion, jewelry, high jewelry? What about food processing and internal agriculture production?
There is the very high luxury goods that to a given extent depend on the global market. So the gold is priced not in Swiss franc, but the gold is priced in dollars. So people producing gold jewelry, they can import gold at the lower prices. So
Yes.
on their side, they have the salaries that are in Swiss franc, but they import, some of the imports become cheaper. So the impact on their side is not going to be as high or as heavy as the others. Agricultural goods, of course, most of the cost for the agricultural goods are the wages, the salaries. So on their side, the cost is fixed, so the prices could be more or less fixed. So importers or people producing abroad and importing goods in Switzerland are going to have an interesting deal because they can import at a much lower prices. So the prices in the agricultural goods in Switzerland are going to come down with impact on the labor market as well as on the agriculture. I mean, big impact you might also see in tourism, because the tourist could choose Switzerland is a good place, nice place and so on, but there are other places where they could go. And now Switzerland has become 20% more expensive for foreigners, and for Swiss people going abroad is 20% cheaper. So you might have some impact. And we have to recall that the Swiss franc is not coming from 120 to 1.
Right.
About 3 or 4 years ago, it was 150, 160. So it's a huge movement that we have seen. The economy has reacted very well, so the GDP in Switzerland has been quite good compared to all other markets. And this means that the Swiss companies has reacted quite well over the last years. But now this additional 20%, it could be the step to a bigger risk of deflation in Switzerland.
Well, so in the very near future, we will not see Swiss franc going to the previous levels at all. Now, we just had elections in Greece, and there is a lot of speculation about Greece trying to get out of the Eurozone. So that will make Euro a lot weaker for a while. Do we see any influence on the Swiss franc in that?
This, I guess, was one of the reasons for abandoning the floor, because the more problem Europe exists, the more people sell euro to go into flight to quality currencies. It could be the dollar or the Swiss franc or other places. So with the increase of the concern on Europe, the appreciation of the Swiss franc could increase. So the more problem our neighbor have, the more people tend to put their money, saving their money into the Swiss franc. And this increases the problem because our economy is relatively small. Our monetary basis, or the Swiss franc around the world, is much bigger than our needs. However, it's small compared to the euro, compared to the dollar, compared to the yen or the pound. So influence on the Swiss franc, it is not relatively easy, but you don't need the same amount of money to move the euro dollar compared to the euro Swiss franc.
I see. Well, thank you very much.